So what is liquidity grab? Probably you have heard me say this many times on the live stream. So to the end of the video, we're gonna discover what is liquidity grab and understand how we can actually use it in trading and how it works in market. If you have anything that you don't understand after the video, feel free to comment in the chat, or even if you have anything that you disagree, feel free to let me know. So without much talking, let's jump right into the chart. We know that the price gonna just move up or just move down, right? But the main thing is the price will not actually move in one direction. So often it gonna go up, go down, go up, go down, and finally it go up for bullish trend. All right, for bearish trend it might actually do the same as well, go down, right, grab liquidity, go bearish, and then grab more liquidity before it really go to the downside. So with that said, you can see liquidity grab as pullback as well. All right, so there's gonna be chance that price grab liquidity to the opposite directions that the trend go. So let's say a bullish trend, it can grab liquidity to the downsides, and if a bearish trend, it can grab liquidity to the upside. Another quick example right here is when you have equal high right here and you try to take another sell based on this equal high. Oftentimes, right, that's gonna be a liquidity swipe off before it trying to go down. So this gonna be where the liquidity try to sweep off the seller right here before the price going down. Same goes to the bullish liquidity swipe, right, on the equal low. When you have a equal low, and you can see many traders trying to buy based off the equal low, but eventually the price tick off to the lower side, grab liquidity to the downside, and actually make a fake out before it trying to go bullish. So this is also a good examples of liquidity grab or liquidity swipe off on the equal low or equal high. So now that's three key points when we try to implement liquidity grab into trading. So the first key point is gonna be always wait for liquidity grab, or you can say that always wait for the pullback to happen before entering a trade. Second point gonna be avoid equal high or equal low. It's not wrong to really trade equal high or equal low, but bear in mind if the equal high is tapped for too many times, let's say above 3 times, a high chance for liquidity swipe is there. The third key point gonna be make use of liquidity grab to find a better entry. So let's move on to the chart and see how can we actually do that. So from here you can see that we actually have an equal low right here. When the price have equal low and it respected for many times, high chance that it actually gonna tick off the liquidity before it trying to go up. So traders might try to get in too early right here based on the bullish momentums right here. With that said, let's see what happens if we actually take a trade around here, if that's a confirmation. So you can see price is slowly showing some rejections, and bang, we have a liquidity swipe off to the equal low right here, taken off this equal low and this equal low before it trying to go up. But instead, if we wait for the liquidity swipe or liquidity grab to the downside to take off this equal low like what we see right here and create a strong bullish candlestick as a confirmation, so the next pullback can be a nice entry to get in, alright, with the stop loss below the low, with the continuations and the momentums to the upside if the bias is bullish. So here we can see finally, right, the momentums kick in right after the liquidity grab to the downside and price eventually go towards to the directions to the bullish trend. Now moving on, another examples of liquidity grab right here, you can see that the price is actually creating a strong bearish candlestick indicating a breakout to the downside. Alright, so this trade is not about liquidity swipe, but it's about liquidity grab on this particular current candlestick for the continuation to the downside. So the candlestick closed around here, and we can see we leaving a long wick to the upside right before it go down. So this particular wick rejections right here, I see it as a liquidity grab to the upside and continuation to the downside. So how can it help towards placing a trade? Whenever we see a room of liquidity grab, then we always wait for the pullback before taking the trade, and then we can eventually get a better entry or else a smaller stop loss. So let's jump into the smaller time frame and see what is the process of this liquidity grab and how we can actually catch this with the confirmations given. So this 30-minute point of view, when we see this is respected with a bearish candlestick, so trade can be taken based on this particular pullback and based on the previous high as the stop loss for the continuation to the downside. And we turn on to 4 hour, we can see that actually it get a better entry based off the liquidity grab and for the continuation to the downside. So we're just gonna go for these two simple example right here. If you like to understand more about liquidity grab, feel free to join into the live trading daily to see how we also trade with liquidity grab. So that's about it for today's video. Make sure to hit a like button for me if you enjoyed it, and stay tuned for my next video.